All right, let's dive into the world of trading. And look, we're not going to talk about any of that get-rich-quick nonsense. We're here to get real. We're going to pull back the curtain on the one single concept that really separates the people who make it from from everyone else.
So let's just start with a pretty shocking number. 90%. That's right. A staggering 90% of new traders lose their money. But the reason why probably isn't what you think. It's got nothing to do with picking the right stocks. It's something way, way more fundamental.
So that begs the obvious question, right? Why? If finding winning trades isn't the secret, then what are all these people getting so wrong? Well, the answer starts with this massive, and I mean massive, misunderstanding.
And here we go. This is it. The single biggest mistake a beginner can make is thinking that trading and investing are the same thing. They are not. They are completely different sports, played on different fields with different rules. And if you try to play one with the mindset of the other, it is an absolute recipe for disaster.
You know, here's a really great way to think about it. Investing? That's like planting a tree. You find a good spot, you plant a healthy little sapling, and you let it grow for years, maybe even decades. Time is your best friend. But trading? Trading is like farming. It's active. You're constantly working, planting, managing your crops, harvesting. You have to pay attention every single day.
And when you look at them side by side, the differences are just night and day. An investor is thinking in years. A trader, they could be thinking in minutes. Investors are digging through company financials, while traders are living and breathing price charts. And the stress level? Come on, investing is generally pretty low-key. Trading is consistently high stress. They are just fundamentally different things. Okay, so if a trader's world revolves around the price chart, we gotta learn how to read it. And you have to understand, a chart isn't just some random squiggly line. It's telling a story. It's the story of this constant battle between buyers and sellers. And your job is to figure out who's winning.
And the language of that story is written with these things called candlesticks. Now, I know they can look a little complicated at first, but each candle is just telling you 4 simple things for a set period of time. Where the price opened, where it closed, the highest point it hit, and the lowest point it hit. It's that simple. A green candle means buyers won that round. The price went up. A red one means sellers won. The price went down.
So what is the chart actually saying to us? Well, it's pretty intuitive when you break it down. If you see a bunch of higher highs and higher lows, it's like you're walking up a staircase. That's an uptrend. The opposite, lower highs and lower lows, is a downtrend. And then you've got these key levels. Just think of support as a price floor, kind of like a trampoline that the price keeps bouncing up from. And resistance, that's the opposite. It's like a concrete ceiling that the price just can't seem to break through.
Okay, so how does a professional trader actually use all this info? I mean, understanding the chart is step 1, but they don't just guess. They're not trading on a gut feeling or some hot tip. They use repeatable, tested systems and strategies. And that is what turns trading from a pure gamble into a business. Pros have systems with crystal clear rules. For example, a really common strategy is to wait for the price to pull back to an area that's considered the fair value for the day, and then you look for a signal to jump in. Now, the name of the strategy doesn't matter. The point is the logic. They have a plan to find a really high probability moment to enter a trade.
And the process itself is just logical. First, a pro identifies a clear trend. Then, and this is key, they don't chase after the price. They patiently wait for it to come back to them, to a logical level. Then, they look for a specific signal that confirms their idea is working. And most important of all, they enter that trade already knowing exactly how much they're willing to risk. It's a plan, not a prayer.
So, we've covered the right mindset, and we've talked about the tools. But now we get to the absolute heart of it all. The real secret, the thing that separates that tiny 10% who make it from the 90% who don't. And it's not some magic indicator, it's not some secret chat room, it's just simple math.
Now, just pause and really think about this for a second. You can be wrong 60% of the time and still make a lot of money. How is that even possible? I mean, our entire lives we're taught that you have to be right to succeed. Well, it turns out, in trading, that's a really dangerous myth. And it all comes down to this number, 1%. The absolute golden rule of professional trading is to never ever risk more than 1 or maybe 2% of your trading capital on any single trade. This one rule is the firewall that protects you from blowing up your account.
Because, and this is the big aha moment, it's not about your win rate. It's not about being right all the time. It's about making sure that when you are right, your winning trades are way bigger than your losing trades. Think about it. If your average winner is, say, 3 times bigger than your average loser, you only have to be right 3 out of 10 times to be profitable. It's a mathematical edge.
Let's make this crystal clear. Take a look at these two traders. Trader A wins less than half the time, but because they only risk a tiny 2% on each trade, they end up profitable. Now look at Trader B. They actually win more often, but they're risking a huge 10% every time they trade. One bad week, and they are completely wiped out. You see, Trader B is obsessed with being right. Trader A is obsessed with staying in the game.
So, after all of that, what is the single most important thing to take away from this? It's a complete and total shift in your perspective. It's about finally understanding what game you're actually playing. This right here is the mindset shift you have to make. Stop obsessing over finding that next huge winning trade. Instead, get obsessed with managing your risk and keeping your losses tiny. Your job is not to be a fortune teller. Your job is to be a risk manager. You are running a business where losses are just a cost of doing business, and your goal is to keep those costs low and let your profits run. And that leaves us with one final and really crucial question you need to ask yourself. When you think about trading, where is all your mental energy going? Is it all wrapped up in the thrill of hunting for winners, or is it focused on the discipline of surviving the losers? Because, as we've just seen, the answer to that question, well, it changes everything.